Hey traders, Nick here. Wanted to look at Walmart. They reported earnings and the stock was up, closed up 1.5% almost, but it was up more. So today's point, not to discuss it in particular, but we can, but also more importantly discuss charts in general. So this is something that I learned years ago, and it was like an epiphany one day. I was like, oh my gosh, okay, so I see it. So I keep hammering the same point over and over because more people need to learn this. So what do I do when I see a stock up? Do I chase it or not chase it? So I shared the thought that, okay, I like it, but maybe I don't want to chase it because this and that. I had 1,000 reasons, but really the only reason that I had was basically this. Let me mark it up to make it easier. It might get messy, but it brings the point across. So this is a daily chart. And so every candle is 1 day. It's almost a year, whatever. Yeah, a little less. And they reported, and boom, they gapped up. They tried to break through 104. I said I would buy it above 104 on a close, but not at 104, because look what happened last time they got there. Look what happened last time they got there. Look what happened last time they got there. So, and the technicals matter. The fundamentals are where they are. It is expensive if you compare it to, say, Costco. It's like 30% more expensive, air math. And why do I compare the two? Those are the closest together, in my opinion. Amazon gets in the middle, but Amazon is a different beast. It's definitely not expensive. This Walmart is not expensive compared to Amazon, but you can't really compare them because they're not the same. Growth. One is a growth company, so you don't really look at value the same way as you would on an established company like Walmart. Okay, so do I chase it here? No, because regardless of the reason it's rallying, forget the headlines. If I see a chart and you show me a chart in the middle of the day and this looks like this, candle green somewhere up here, and you say you want to buy it, I'll say maybe. I'll put an alert. So I did put an alert above 104. So if it closes above 104, I'll get an email saying, hey, something's going on. Go check it out. So I'll go to the chart and see if they closed above it. So what happens usually is they close above it, and then they go back to revisit it. So, and then they establish it as footing to go higher. But in this case, they haven't gotten there. So before they go above it, they have to break through it. And today's move was fantastic, but you know they faded into a close. But what happens now? They probably they faded, and they're going to try it again, maybe several times. They butt up against it again, and then they break through it if the market complies. So how does that, has that happened before? Yes. Here's one. Well, this whole zone here. They fell through it. They tried to go, boom, R, resistance, boom, R, resistance. I should put F for fail. So they tried it again, and then finally broke through it. And they tried to find footing. Broke through it, right? They did this, and then broke through it, and then they test it for footing before they can go higher. And they kind of did, but I said it's a zone, not a hard line in the sand, and they moved off of it. So if I extend these two lines here, it's a zone, and they moved off of it. Boom, they tested the zone again, a little better result this time, and they went. So they did this. Maybe now, okay, let me clean it up. Maybe now it'll be some sort of an ABC move where they have a burst, although this is too long for my taste. And then they have another burst up like this eventually, but tick, tick, tick. But they usually don't slice through definitive levels like this without stopping at it. That's basically the summary. So clean it up. Actually get rid of it completely. Sorry about that. Okay, so I'm going to expand to a weekly. Maybe we can get some more information from the weekly. Okay, less noise. Now we're looking at years worth of data. Every candle is 1 week. So now it's a little more clear. You can see how this is this week's candle. Matched the last time it failed, and the last time it failed before that, and failed before that. And look at that. I remember trading Amazon on one of these bursts. I think it was this one. And also this was looking good. And then we had the correction last year, and now we're surfacing above it. So you can see there's give and take, but you have to pay attention to what happened in the period before it in order to see where I get out if I'm long. So if I was long into the earnings, this would have been me getting out. If I'm long for the long term, I don't worry about it. But if I'm long as a trade, tactical trade, midterm, I would be out. I can re-engage above, but for now, I got my money, short-term money, I get out. So make sure to pay attention, look left, and see what happens. Now, fundamentally speaking, if you want to discuss that, they delivered a decent report. They are spending the money in the right places. They're trying to compete with Amazon. They even beat them to the punch on a couple of things. I think the overnight delivery or something. Amazon announced it the other day. These guys brought it to life. But this is expensive. To compete with Amazon, it's expensive, especially when Amazon is already thin on margins. And then they also said that China is going to raise costs. So they either pass them along to us, the shoppers, or trying to negotiate some lower prices with their sources. Luckily, I don't think they're heavily, they source more stuff outside of China than inside China. So anyway, good company long term, a little expensive at this point. If the market goes higher, this one goes higher. But if the market's correct, this one is not going to rally off that one report. All right, Nick signing out.